Good evening, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, guys, well, the SPY and the QQQ performing very well. We had another broad-based market rally where no major sectors were left behind. In terms of the technicals, the bulls are looking really good right now, setting themselves up with a nice daily uptrend, trying to attack that resistance range on the SPY and the QQQs. After a few weeks of sideways consolidation, it may just be the time to break out, and several major sectors are pointing to being leaders of the pack, namely semiconductors. So in today's video, guys, we're going to recap a few things together. Number one, we're going to be going over some of the drama that's currently happening between one of Trump's closest advisors, Elon Musk, and the administration. And thereafter, we're going to recap some Crowdstrike earnings. They had earnings today after the bell. Crowdstrike, HPE, and several others, but we'll be focusing our attention on Crowdstrike today, presenting you their earnings and whether or not the company seems to be in a good buying location. Thereafter, we're going to get into our major technical analysis of our major sector rundown, see who the leaders and the laggards are, and where we might be able to best position for some swing trade longs into a potential breakout towards the all-time highs. Thereafter, we'll do the same thing when we take a look at some of our big tech names. Which tech names are leading, which tech names are lagging rather, and which ones represent the best opportunities for some possible swing trades, but also which ones are possibly best for some long-term positions in the event that we wanted to add some to our portfolio in the current environment. So without further ado, guys, should be a very fun and interesting video. Let's jump right into the action, shall we? So the SPY on the day up 0.57%, the Qs up 0.78 overall, and as you can see from this list, not really any major sectors left behind. Consumer defensives lagging a little bit, but nothing more than that. You can see the heat map right here. Big tech had a really good day, except for Amazon, Google, and Meta. Google once again coming under the gun because of those Department of Justice headlines and everything like that. Semiconductors really starting to lead the market to the upside after those NVIDIA earnings. I'll remind you, Broadcom has earnings on the Thursday close, and that could also send the markets a little bit higher in terms of your semiconductor rallies. Financials not performing too poorly, although Berkshire was pulling back. Healthcare also not a bad day on healthcare, fairly mixed, but the sector did manage to put in some gains. Industrials and the bottom half of the market responding well to a slight decrease in the 10 and 20-year yields overall. So when you recap the full market segments here, you can see that on a one-day relative, tech was the lead bull once again, guys, and they have been the lead bull now for approximately the last 2 to 3 weeks at this point. And to the downside, communication services overall. Where do you stand on the 1 week relative? Well, everything pretty much pulling up into the green, except for your consumer cyclical. Yes, a lot of apparel stocks, restaurant stocks, and anything that's consumer discretionary still is under the gun as people refuse to spend money on things they do not need because of the possible fears of tariff price increases and also the possible fears about a recession coming in Q3 and Q4. That being said, before we get into more technicals, let us recap some of the drama that happened today in the context of the White House. Now, if you'll notice here, it was a very beautiful start to the day, and then we had this little drop right here. What was that drop associated with? Well, it was this drama that all started with Elon Musk calling Trump's spending bill a disgusting abomination. Definitely not holding back on his words right there. Let's take a look at what Elon said. "I'm sorry, but I just can't stand it anymore. The massive, outrageous, pork-filled congressional spending bill is a disgusting abomination." So definitely not mincing his words. Shame on those who voted for it. You know you did wrong. You know it. Reiterating, saying that essentially it is undermining the efforts of Doge, right? He was trying to do a lot of cost savings, and unfortunately the current administration took the cost savings, but then just spent the money kind of elsewhere. So Elon Musk feels kind of bad in terms of that. But right now, what he's possibly trying to do is maybe distance himself a little bit, as he's been very political for the last 6 to 8 months. And we know very well that it has damaged his brands, you know, not lightly, but pretty much a lot in the last 6 to 8 months. He's alienated a big portion of his consumer base, especially in terms of Tesla. Now, a few other people were commenting on the bill. Speaker Mike Johnson saying that Elon Musk is considered to him as a good friend, but that he respectfully disagrees. But other people, such as Rep. Thomas Massey, saying he was right in terms of what Elon was saying, and even a couple other people, right, such as Mike Lee, and other people such as Rand Paul also agreeing with Elon Musk. So a little bit of turmoil there, and we did have the press secretary Caroline Leavitt coming in and saying essentially that the administration was aware of Elon Musk's stance, and you can see that right here. Look, the president already knows where Elon Musk stood on this bill, said Caroline Leavitt, but it doesn't change the president's opinion. This is one big, beautiful bill, and he's sticking to it. So you can see the possible end of the bromance between Elon Musk and President Trump at the current time. That was the only dramatic news headline that we had for today, so I figured I should recap it. It doesn't really impact the markets that much overall, but we do know that spending is a problem right now for Washington, right? It's the reason that the dollar has been weak. It's the reason that longer term yields have been quite high. And it was one of the reasons that Moody's did cite recently, about 3 weeks ago, when they downgraded the credit rating of the United States. So this is a developing story, and we'll keep track of it as the time moves on, of course. Now, with that out of the way, I will remind you, tomorrow, Wednesday, is going to be an action-packed day, of course, not so much in terms of the macro releases. We only get ADP private employment changes early on in the morning, followed by ISM Services PMI. But what will be the biggest catalyst for tomorrow, guys, is, I'll remind you, yesterday, Trump was saying that he wanted all countries' best possible offers for trade deals on the table by Wednesday. So tomorrow we might have an overshadow of these macro events if we do start seeing some deals come in. And in terms of the way the markets are structured right now, they are structured to benefit from any positive trade deal catalysts, as the bulls do have the daily uptrends right now. They do have the start to a bit of momentum, but we know this resistance area is going to be challenging. It is the all-time high area of resistance, and you're going to need some pretty big news to get through it. Are those trade deals possibly going to be the news catalyst to do it? Well, we will see over the course of the day tomorrow. Now, before we get into more charts, let us dive into the Crowdstrike earnings, shall we? So Crowdstrike has been a company that we've talked about many times on the channel, especially after they came down into this location after the tariffs. I was saying it was a pretty decent location to start some Crowdstrike longs, and now we found ourselves pretty close to the all-time highs after today. Not exactly at the all-time highs before the close. You can see it pulled back a little bit, but we were leading into all-time highs pretty much the last 3 days. Now, keep in mind, guys, Crowdstrike was up 40% year to date. So for them to have a fantastic earnings showing and push the stock even higher, they needed to show some exceptional results. And unfortunately, that did not happen. The numbers were good, but they were not exceptionally strong to push the stock even higher after a 40% year-to-date gain. Let's take a look at some of the numbers, shall we? In terms of EPS, they had a nice beat on EPS by about 10.5%. That is really good, but a very tiny miss on revenue. And also, the revenue guidance was ever so slightly underwhelming. So when it's not an absolute perfect report and the stock is already up so much, this is when you can find some pullbacks, and that's indeed what happened. Crowdstrike stock down approximately 7% after their earnings, although the numbers were actually quite decent. Let's get into some of those numbers, shall we? So Crowdstrike shares drop on weak revenue guidance. Let's get into that guidance. Revenue increased by 20% year over year. That's never been a problem for Crowdstrike. That's been the case over the last few years. 20% clips year over year is quite standard for them. However, they did encounter a net loss of 110 million, and they pretty much explain that to say that costs rose in sales and marketing, as well as in research and development and admin, partially because of a broad software outage last summer. You guys remember the drama surrounding that? That is when Crowdstrike really fell off a cliff, when they were tied into Microsoft. This is that infamous drop right there. They were able to recover, but of course there was a little bit of brand damage done. So they've been spending more money, well, not only on R&D to stay at the forefront of technology in terms of cybersecurity, but a lot of sales and marketing, not only to retain their customers, but to attract new customers to their brand as well. Let's move on, shall we? So for the current quarter, Crowdstrike called for 82 to 84 cents in EPS on 1.14 to 1.15 billion in revenue. Now the EPS beat the estimate. 82 to 84 cents is better than the estimate of 81. However, the revenue came slightly shy. The expectation for revenue this quarter was 1.16 billion, and the revenue coming slightly under. A little bit of a mixed guidance there on Crowdstrike, and that will not be good enough to send the stock up another 5-10% after it's already up 40% year to date. Crowdstrike bumped up its full year guidance, however, in terms of earnings, but maintained its expectation for revenues. The company now sees 3.44 to 3.56 in EPS. That was better than their previously established guidance of 3.33 to 3.45, about roughly, let's call it, 5% better. Revenue, however, was pretty much flat and in line with the expectations, 4.74 to 4.81, the midpoint being 4.77, and that's exactly how much the expectation was already, so just not beating the benchmark in terms of expectations on revenue. However, they did announce a $1 billion plan in share buybacks, saying that it reflects their confidence in the brand and the future and the unwavering mission of stopping breaches, of course. In May, the company said it would cut 500 employees, which works out to around 5% of its workforce. That will definitely help their operating margins and their free cash flow margins as well. As of the Tuesday close, the stock was up over 43%. So it just goes to reiterate, guys, when you are your own worst enemy, meaning when you've rallied so much and the burden is so high on your shoulders, if your earnings come in anything under spectacular and outstanding beats, especially with that amount of gains year to date, the stock has a very high likelihood of pulling back overall. We can get into some of their earnings slides. You will see here that they are the cloud and application runtime security, innovation, and growth leader. In terms of the innovation index versus the growth index, Crowdstrike sits pretty much at the top of the pack right here, in line with Wiz. I'll remind you, Google acquired Wiz for about $30 billion just about a quarter ago. Crowdstrike leaps and bounds ahead of their competitors. They've been doing a good job, guys, of simplifying their offerings as of recently too. You can see how many different aspects of cybersecurity indeed exist in the marketplace right now, and how many different companies operate in each one of these segments. What is Crowdstrike trying to do is they're trying to amalgamate all of these segments and provide companies with a one-stop solution. I'll remind you, the only other company that's trying to do this is Palo Alto Networks. So they're really playing 1 and 2 for the leaders in terms of a consolidated service for cybersecurity offerings across all of these, 6 or 7 different variants of the market right there. Now, in terms of the adoption right here, you can see that the clients are embracing the platform. 48% of clients are adopting 6+ modules, 7+ modules at 32, and 8+ modules at 22%. So seems to be the company is able to sell a lot more than one simple aspect of cybersecurity, such as these other companies. They're able to really package and bundle deals, and the annual recurring revenue rate is pretty good at this current stage, adding right now about $200 million in ARR. You can see that the total ARR now coming into this year is about $4.4 billion. The company has a long-term goal in 2030 of having about $10 billion in ARR, and the CEO did reiterate on the earnings call that they were moving well into that direction. Subscription revenue also remains a bit higher at roughly over $1 billion, which was pretty good overall. So non-GAAP profit and free cash flow, here we can see the drop in operating income from those raises in expenses. Essentially, subscription gross profit was up overall, and free cash flow stays at a cool $279 million, slightly under what we had last year, once again due to some of those operational challenges that they've been having, trying to spend a little bit more money in R&D, trying to spend a little bit more money on infrastructure to really start gaining more and more clients overall. So not too bad, guys. 22% year over year in ending ARR. That's what you want to see for subscription model companies. If they can grow mid-teens to low 20% range, they're pretty much top of the class in terms of that, and Crowdstrike is no different right there. So very solid, and the numbers in terms of the guidance we already went over. So there's really nothing fancy to report. The company is operating as best as it can. The main thing that you have to watch about these cybersecurity companies, guys, is that they all, for the most part, have very, very high gross margins. You want to see them be able to maintain 70 to 80% gross margins. The problem with a lot of these companies, though, is they don't bring much of that money to the bottom line. Since it's a very competitive space, they spend a lot of money on sales and marketing and a lot of money on research and development to make sure that they have the fastest service, but also the most secure service. So they got a lot of operating expenses. You can see their operating margins have been negative as of the most recent few quarters, and net margins as well. Unfortunately, Crowdstrike used to be, a few quarters ago, a net margin profitable company, but now in the last 2 quarters that they spent more money on those costs, they've once again dipped into the negative net margin territory. There's not many companies out there, guys, that have positive positive operating and net margins overall. One of the ones that comes to mind that has the best margins of everybody is Fortinet. You can see down here, Fortinet has some phenomenal net margins, but if I just pull up a few of their competitors, Cloudflare, which we looked at a few weeks back, them too, negative net margins, and so many other competitors in the space. I mean, Palo Alto Networks is trying to stand apart from the pack. They also have decent net margins overall, but they're few and far between the cybersecurity companies that do have very good net margins. So, in terms of the fundamentals right now, guys, is this company a good buy or not? Well, the answer is it all depends on how much you actually want to pay for that growth, because the company is trading very expensive right now. They have a beautiful retention rate, but I understand that the net margins are currently a problem for them. They can scale into them in the future, but here's the valuation real quick, right? At $450, where they currently stand in the after hours, you're looking at a price to earnings ratio for a forward basis ending 2025 of 128.6. Very high. Even in spite of their 25% year-over-year EPS growth rate, it gives them a peg of 5.14. And I understand that sometimes EPS is not the best way to measure some of these high growth, fast-paced companies, but even when you measure across price to sales is currently sitting at a 25. Now, the cybersecurity industry is not cheap by any measure. Most companies in that segment do trade between a 12 to 20 price to sales, but Crowdstrike is definitely kind of richly valued at this current point. However, if we get a pullback lower into the $400 range, talking about 410 down to 400, that is an area where the valuation, in my humble opinion, makes a bit more sense. It would still be somewhat overvalued down there, but at least you're getting a better risk to reward profile. What do I mean by a risk to reward profile, guys? Where it's very simple, right? If their target, the CEO stated, was $10 billion in ARR by 2030. Sure, they have a couple other lines of revenue, but overall, let's say that the revenue run rate at that point will be roughly around 10 billion, and that does make sense when we take a look at the revenue forecast down here. You can see that in 2028, it's going to be roughly approximately 8.5 billion. Add another 2 years, and you might be about 10, 11 billion, right? Right now, the company's market cap at the current price is 121 billion. Now, I don't care how fast an industry is growing, a whole industry will not trade at 20 price to sales forever. Usually tech companies tend to settle around a 10 to 12 price to sales, which is relatively fair. So if we just take that in mind and we divide the current market cap, 121 billion, divided by their 2030 revenue profile, which would be about 10 to 11 billion, that is when you'd be sitting at a 10 to 12 price to sales, right? That is literally currently full priced for Crowdstrike right now. So we have to give ourselves a bit of a margin of safety, which is why I was saying down here in the $300 range, it was a great buy. Up here, not so much. That being said, if you're in this one already with a cost basis, below 300, or potentially you've been in this one for a long time, I don't see any reason to sell. But people who are initiating new longs up here, well, at this current stage, guys, the risk to reward profile, especially if you're just looking at a fundamental profile here, is not the best overall. And that is my take on Crowdstrike. Fantastic company, but just because it's a fantastic company does not mean that we have to buy it at any price, right? So hopefully you guys enjoyed those earnings. Now let's dive into some charts. All right, so taking a look at the SPY right now, we know that the momentum currently is favoring the bulls. The bulls have done a great job here of building an accumulation zone over the past 3-4 weeks of trading, and we might just be looking for a phase of expansion. Keep in mind that tomorrow, we may be getting some trade deal announcements from other countries, which could send us up into resistance. We're getting very close to it right now, 600 up to 610. So the bulls are looking very strong right now, and below us in the event that we pull back and it's not the case and we just come back into this range of accumulation, we have good support below us. 585 down to roughly 575. These short-term EMAs are right there. On the weekly timeframes, which are the most clear timeframes in my opinion, this is an accumulation bull flag in my humble opinion right there. It's a very nice weekly uptrend, sideways accumulation at the top end of a very nice leg of price action. Might just be looking for that expansionary leg. Keep an eye on it over the course of the day tomorrow. I'll give you guys my impressions on which sectors are leading. And we're going to get into one of those leaders right now. And one of the leaders right now is definitely technology. Beautiful daily uptrend set by the bulls right now, already coming halfway into the resistance range, 535 down to about 523. So the bulls are trying their hand at it. A couple good days of trade deal announcements, and you might just be able to break through the all-time highs. And then it would open up a very nice swing trade opportunity, guys. The good old breakout, retest, and possibly run. That's a trade setup that I'm possibly looking for, but several names in big tech are lagging. So rather than playing the QQQs, I might have more of a penchant to actually play the lagging segments of that market. Moving into the weekly timeframes right here, accumulation range at the top between two zones, the resistance range and the support range, and might just be looking for a nice little breakout here, guys. Keep that on the watch. The MACD momentum has crossed positive now for the 3rd and 4th weeks running. So the bulls have a very good chance, but it will be heavily reliant on those headlines coming out tomorrow. onto XLF financials right now. Financials doing a good job of also building a shelf, staying very close to the resistance range. The bears tried to reject this many times, 5 to 6 days in a row, and not able to do it. So we are currently looking for some possible bull expansion. If you crack through the resistance highs of 51.50, it'll be a very nice new daily uptrend, and then you might be looking for the classic breakout, retest, and run trade on XLF as well. The sector is looking quite good, no red flags at all, and the weekly bulls remain in full control. The higher lows are now set, looking for another weekly leg of expansion overall. Keep an eye on those higher lows, 49.50, so the bulls still with tons of space. XLV Healthcare right now also trying its best to kind of curl above the 12 EMA. 12 EMA is the short-term moving average, guys. Usually when you reclaim that back with several daily closes above, you can see an upward revision in momentum overall. We know that right now we're in a very nice range of accumulation right now. Some would argue that this is a bear flag since it is at the bottom end of a weekly move, but just understand where we are actually. We are into a very wide area of support, 130 all the way down to about 121. So this entire zone right now below the 200 EMA is a very wide range of accumulation, but an area of accumulation nevertheless. The time frame that makes the most sense for me, if you want to be honest, is this monthly chart, right? Monthly downtrend right now, lagging the rest of the indexes, and currently we might just be seeing some peaking out of negative momentum to the downside. So XLV is not one that's known to be one of the fastest movers, but even on the weekly here, you can see the bulls are trying their best to reestablish some levels right here. Any break and pop above the current price range, talking about this guy right here, 135, it's going to set back in motion the bullish time frames, looking good, and the event that it just breaks down, guys, I still think it's a good area to accumulate some position, some swing trade longs on XLV, because this sector can only lag behind the SPY for so long, and it has been doing so now for the past 4 years overall. On to semiconductors. This is another one of your lead bulls, guys. So if you're looking to play the breakouts, you have to go with the lead bulls. QQQ Tech and SMH are two of those lead bulls, so keep that in mind. It was a very nice daily uptrend. We encountered some resistance over above. That resistance range was 250, roughly up to 260 overall. We are still below the resistance range overall, but the bulls are trying their best to reset a daily uptrend and go for that momentum push. Two of these sector leading bulls right now are NVIDIA and Broadcom. Broadcom with their earnings, of course, on the Thursday session. That being said, the clearest time frame of them all, in my opinion, is additionally the weekly time frame, where we have a very nice weekly of expansion, consolidation range, accumulation zone, in other words, a bull flag, and now the bulls might just be looking to attack this zone. If Broadcom earnings are good and ignites some further follow through into the sector, I would not be surprised if by the end of this week we can make our way to the top end of resistance and maybe even break above it overall. And now lastly, the IWM Russell. So the Russell not performing too poorly today, also setting a new daily uptrend into resistance, the same as the other indexes. 216 down to 208 is that resistance range. You guys know it's a very big level, chop zone from back here, resistance from back here, resistance from back here, and was support for a whole 9 to 11 months back there in 2021. It's a very big level, but if the markets keep pushing higher, growth will probably not get left behind. Overall, it's a very nice weekly uptrend as well. The higher lows are set, and now they just might be looking to expand a little bit more. Keep an eye on your sector leaders, guys. Tech and semiconductors will be the ones that will move the markets in the largest fashion, in my humble opinion. That is everything for your sector recap. We'll quickly look at the VIX. The VIX also very weak right now, so this also does point to the fact that we can see some further moves higher on the indexes. The only time this VIX is going to spike is if we get some negative headlines, negative geopolitical developments, or negative developments in terms of the macro overall, but right now not looking too bad. The dollar still remains notoriously weak, but not flushing yet, guys. The flush zone is down here, 98. So it's still anybody's guess whether the bulls can recapture, make a second attempt at coming back into the resistance range, or whether or not we follow my arrow right here and completely sell off overall. That is going to be highly dependent on the amount of trade deals that come out in the near-term future and whether or not it can ignite some bullishness back into the US dollar. We know several factors have been affecting the weakness of the US dollar recently. Especially that the trade deficits and the federal budget spending, of course. Now, the 10 and 20-year yields also remain roughly flat right now. The 10-year yield is still under 4.5, and the 20-year yield is still under the 5% range. I still think it's a good opportunity to be building some positions on bonds, but as I've been clearly saying for a very long time, guys, it's going to be a very slow path to recovery overall for these bonds, and yields is a very complex trade, very difficult to predict. There's too many moving parts, in my opinion. All that we know is that if the Fed continues embarking on this rate cutting cycle, eventually the longer term yields will start following the short term yields overall. And that is in spite of the risk that the United States faces right now overall. That's pretty much everything for your sector rundown. Now, let's jump into one of my favorite possible trades, which is going to be gold for the next coming days, guys. This one is looking like an absolute beauty right now. The daily chart is picture perfect in my humble opinion. Beautiful daily uptrend expansion, looking for a new higher low. Seems as though we got it coming down into here into the 3350 mark. The lower time frames are already starting to switch around. You're noticing the bulls trying to make an attempt here, trying to recapture the 4-hour uptrend. We'll see if they can do it. And even on the 1-hour time frames as well, guys, you got the 1-hour time frame flip. Any higher lows should be buying, guys. So the trade right now is live in my humble opinion. If you wanted to take this one with a relatively tight stop loss, the stop would go below 33.33 to the downside. And at this point, you would be targeting 34.30, 34.20 to the upside, just looking for that daily follow through. And the larger time frames do support that as well, guys. The weekly bull flag of accumulation right now, very solid hold by the bulls in this whole area, looking for some possible expansion into the 34,500 range. Gold is looking very good, probably one of my favorite charts just in terms of the pure technical setups right now. So keep that in mind for tonight's trading action and also into tomorrow morning as well. Now, moving on to digital gold, we're going to talk about Bitcoin real quick. So Bitcoin actually not doing too much today, but we know the pattern is still holding for your bulls right now. What are they trying to do, guys? Well, quite simply, we're trying to back test support, daily downtrend into the support range, which is roughly 105 down to about 101. That is your previous all-time high range of resistance. It is now acting as support, and the clearest time frame for me right now is the weekly chart overall. Very nice support action by the bulls here over the last few weeks overall. And even if we were to lose this area, guys, it's still just looking for a higher low, right? At this point, anything above 75K, looking for a higher low. So this is an area to be possibly building some swing trade longs positions all the way down into the 12 EMA, which stands at about 98K, looking for the next leg of expansion, which could possibly hit as high as 115, 120, 125. Those would be your profit targets if we are just looking for the next leg of weekly expansion. It definitely would make sense. Bitcoin is looking pretty good, all things considered. Now that that's all out of the way, let's take a look at some of our big tech names overall and see which are the leaders, which are the laggards, which ones in which can we position overall. So taking a look at Apple first, Apple definitely is one of the laggards of big tech. It is still currently off the all-time highs by a very wide margin, talking about 22% off the all-time highs. But we know that the valuation of Apple, even though it is down, is still very high. And right now, Apple has been trapped in a range, guys. Trapped in a range now for the past, 4 or 5 weeks at this current stage. That being said, overhead resistance stays put 210 up to 221 and support below 196 down to 187. If the markets keep rallying, Apple probably will not be left behind, and the bulls are clearly going for a new daily uptrend. So if we have any swing trades to be made right now, the stop loss, in my opinion, would be down below here of 193. And at that point, you'd be targeting about 215, 216, expansion into that weekly resistance range overall. But the weekly time frame is not so clear, just an overall very choppy zone right now. My favorite way of playing this is if we have some red days, I like to play some short puts under the market on Apple down into the support range. Moving on to AMD right now, AMD started to take charge again, 2.34% to the upside, and the bulls going for the daily uptrend shift. Very nice shift by the bulls, daily downtrend into support. Now they've reset the price action in terms of the higher highs and the higher low setups. This makes sense when you take a look at the weekly, guys. It's kind of like the SPY and the QQQs, right? Beautiful weekly uptrend, sideways consolidation at the top end of the move, not giving too much back of this whole support range, and now possibly looking for the next weekly leg of expansion, which would, set us into the 120 to 132 range into resistance overall. Fantastic price action on AMD. If we had some swing trade longs to be had right now, the stop would go below 108, and the take profit would have to be at the higher end of the 130s. Not looking too bad. Keep in mind that is a weekly expansion swing trade overall, and my favorite way of playing the downside is in the event that we get some red. I like to sell puts on AMD anywhere down here in the mid to low $100 range. Moving on to Amazon right now, Amazon overall 0.45% to the downside. Amazon not cooperating as much as some of the other big tech names in this list. However, the bulls are trying to go for the daily trend change. Need to get a break-in close above 208.66 to make that happen overall, right? So they're not looking too bad. Also a sideways range of accumulation right now. There is still that gap to be had at 193. Remains to be seen if the bulls will actually allow the bears to fill that, but as of now, higher lows are set, possibly looking for continuation with the rest of the markets, and resistance range stays put, 217 up to 228. If Amazon drops, quite simply what I will be doing is playing short puts under the market, looking to pick up some shares in the mid to high $190 range. I think the valuation of Amazon is very fair down there, and it is still one of my favorite companies in the entire market. It's just the price action recently has been somewhat choppy. On to Google at the current stage right now. Well, Google, unfortunately, is now in a daily downtrend, guys. But have no fear, right? We are into big support. 170 down to 161 is the big support range for Google. It's established that area many different times as resistance here, as support back here, and now once again as support again with all of the EMAs. Now, Google has been very weak as of recently, especially compared to some of its sector peers, failing the breakouts numerous times. But I'll remind you, who is in control of the higher timeframes here? It is still your bulls. It is still a weekly uptrend looking for a higher low. At this rate, anything above 149 looking for a weekly higher low for some expansion. So I do still love playing some short puts on Google down there in the lower 160 range. That's why they're always in my top 5 options video. The valuation is fairly cheap, and I do believe the risk reward profile to be quite attractive for this company. But keep in mind, I did say risk to reward profile. You can't say that there's no risk, right? Moving on to Meta right now. Meta down about 0.6% overall. Meta had a very beautiful breakout yesterday, and now might just be looking for a little bit of consolidation. We will see how long that lasts, but at this rate, anything above 633, just looking for a new daily higher low to possibly continue the daily uptrend. Meta is well on its way to breaking up for another weekly leg of momentum higher. The weekly bulls are clearly in control, right? And now we're just looking for that expansion. There's really not much in terms of resistance ranges above us. You can talk about these guys in the mid 670s. And after that, I mean, we're already into them. After that, it's all the way to the all-time highs, 740. I still do like Meta, guys. Maybe not so much for a swing trade unless we can pull back a little bit more, offering some stop losses below the support range right here, which would be roughly 620. And then you'd be targeting the all-time highs for that weekly leg of expansion. But I do like it a lot to add to any long-term portfolios. I do not think it is too late at all. The company still trades at a relatively fair valuation in terms of its historical averages, and I do believe the expansion factor for Meta, with the amount of free cash flow, with the amount of net margins that they do generate, should set them up pretty nice for some share appreciation into 2026, 27, 28, and beyond. Moving on to Microsoft now. Microsoft also not doing a whole lot of anything, right? Still consolidation at the top. It is grinding higher, but not by much, right? We know the bulls are in full control of this chart right now. The higher lows are set, and maybe just looking for another leg of expansion. The higher lows are still planted at 448. So any consolidation, looking for more higher lows for possible daily trend continuation. Your next target right now for Microsoft is the all-time highs, 467. No swing trades for me on Microsoft right now. There's just not many clearly defined levels for me to establish a clear risk to reward profile for the short term. However, in the event for XYZ reason, Microsoft and the whole markets consolidate into a daily downtrend, into a bit of a weekly consolidation phase as well, then I might be looking to build some long positions, 443 right down into the 425 pocket. That would be pretty sweet coming into resistance and the curling up of the moving averages as well. Microsoft, phenomenal company, but even right now at 440, the valuation is, even at 460, the valuation is a little bit stretched. It was a fantastic buyback here on the channel, and I said it every single week when it was down there. But right now, if I'm in, I'm definitely not selling any shares, but starting a very large Microsoft position up here, maybe not the best risk to reward profile overall. On to Netflix right now. Netflix down about 0.09, but Netflix really not breaking any major structure overall. This is another one where it's very hard for me to build any swing trades, right? It has been a sector leader such as Microsoft, but now in big tech, I'm trying to play the ones that are a bit left behind, the Amazons, the Googles, the Metas, the AMDs, the even to a certain extent NVIDIAs, too, right? On the Netflix right now, and at this point, anything above 1175, just looking for a daily higher low for possible further trend continuation. All-time highs, blue sky breakouts, 1250, 1300 are your next psychological targets. Very extended on the weekly EMAs, or the weekly time frames, extended from the 12 EMA. So not a buy for me right now. I'm in Netflix as part of my long-term portfolio. I'm not selling any shares, but once again, this is another stock where the risk to reward profile for further upside is just not there for me, right? I'll let you guys know in the event that something does come up in the future, but right now Netflix is trading, fairly expensive in terms of historical averages. Moving on to NVIDIA, 2.8% to the upside, and this is one that I do really like, guys. Number one, for the valuation, NVIDIA is still relatively cheap compared to what they plan to do in the next 2 years. Yes, the revenue run rate is somewhat slowing down in terms of the growth, but it is still growing very well and very high net margins too. That being said, the daily is looking phenomenal right now. We know they had the breakout after earnings, the retest right now, and maybe looking for a little bit of run. The next profit targets right now, in my opinion, stay at the 150 all-time high range overall. The bulls are looking very good for some expansion right now on the daily timeframes, but not only that, on the weekly timeframes as well, right? Very nice weekly expansionary leg right now. Apparently still not done overall. And even if we were to fail this expansion and go into some form of consolidation, the support range below does present another opportunity to load up some longs, in my opinion, and that would be 135 down to 125. If it comes down hard and fast on 1 or 2 days, I'll be gladly writing some short puts under the market down there and possibly positioning for some swing trade longs. I already have my swing trade longs. I took them prior to earnings and now just riding them overall with the stop loss below this guy, because that would invalidate the long, of course, right? Moving on to Tesla right now. Tesla down about 0.46%. Now, we know that what Tesla was doing was establishing a bull flag like back here, trying to go for the breakout. Establishing the bull flag right here, tried to go for the breakout. Unfortunately, it has now failed. So we are right now back in the confines of this range of accumulation. Didn't quite make it up to resistance, 380 all the way up to 400. Pay special attention, guys, right? The bulls are trying to go for something here, but when you see a 100% engulfing move to the downside of a breakout move, it just may not be the right time for Tesla overall. So no swing trades for me on Tesla, but it's in the middle of the price action, right? Where do we currently stand? 344. Where's the support range? It's all the way down here, 300 down to about 260. I'm not saying it's going down there. I'm just saying that's where the next big area is. And to the upside, 410 down to 380, we are equidistant. We are in the middle between resistance and support. That is not very good risk to reward, in my humble opinion. Some could argue that there is a small swing trade long to be had if you keep a very tight stop loss below these guys, 330, and then you're looking for the 380 expansion. That does make a little bit more sense, so keep that in mind. Moving on to Palantir right now. Palantir up 0.86%, going for more all-time highs on the day. Palantir looking good. Daily bull trend expansion right now. And on the weekly, well, the weekly's never been a problem, right? We know that the weekly bulls have been in full control of this chart for a few weeks at this point in time. Matter of fact, like 2 months at this current stage, right? Palantir looking very good. Blue sky breakout. Next profit target, in my opinion, has to be psychological numbers such as 140, 150. Very tough for me to establish some swing trades on Palantir right now because we have a lack of levels, right? We've pulled too far away. There was some entry opportunities here, which we were talking about on the channel with stop losses down below there, going for the 150 breakout. But now I will have to admit you are a little bit late on this trade. And in terms of fundamentals of the company, buying some for the long-term portfolio here, I also deem people to be late who are buying here. I'm not saying that it can't keep going up. I'm just saying you've priced in a lot of growth and you might not be getting the best risk to reward for some compound annual growth rates on Palantir, at least not as good as the people that bought it down here are. So keep that in mind if you're buying shares of Palantir. Now moving on to good old SOFI here. SOFI 13.66, down about 0.07%. We know that SOFI, guys, has not really been doing nothing, right? It was kind of trendless overall. We had a daily downtrend out of resistance. Now they're trying to go for the daily uptrend. We know that that resistance is very wide, $14 up to $16. I do believe that SOFI is still a very good purchase for a long-term portfolio. I do think this company can expand. Its market cap currently is sitting at about $15 billion. I think there's a decent 2x left in this stock, especially with the growth that they have, through 2028. Now, for trading with some stops, guys, the stops have to be where this yellow line is right there, 1271. Why? Because that is going to be the weekly level. If we lose this, it invalidates the weekly uptrend status. We go into weekly downtrend, and we might just be looking to revisit the $12 to $11 range overall. There is some swing trades with that tight stop loss, and expansion should be into the $15 to $16 range. Looking pretty good in terms of price action. My favorite way of playing this stock on red days, guys, is selling puts under the market, not so much positioning long, but this could be a decent candidate for some leap call options. But you got to make sure you got to put a lot of time on those contracts overall, because we know interest rates are stubbornly high right now, and that is one factor that is continuously affecting the price action of SOFI. Moving on to Uber right now. So Uber with another down day, unfortunately down about 1.33%. Daily downtrend right now is maintained, and we've called this out, guys, pretty much perfectly from the top overall. to where we were coming into some overbought conditions on the daily timeframes, and to where the weekly timeframes as well were very extended away from the 12 EMA. Whenever something pulls really far away from the 12 EMA, the pullback is eventually coming. It doesn't mean that the bulls are not completely in control of this chart. They are looking for a weekly higher low right now, anything above 71.13, looking for that higher low. The best area of confluence, in my opinion, is these guys right there, between the 12 and 26 EMAs, and right into our breakout area, which currently previously was support, resistance, and now currently is support. 80 down to 78 bucks. My favorite way of playing this one is short puts under the market. And I'll remind you, the valuation of Uber down here is fair, in my opinion. It's not cheap, it's not expensive, it is fair, good net margins, decent forward price to earnings, very good PEG ratio, and a very good free cash flow yield overall. Company is still growing very well. And now lastly, moving into TSM up 1.42%, guys. This is also one that we got to keep an eye out for the possible breakout, moving into the resistance range of 210 down to about 205. TSM is looking very good right now. Many semiconductor names are as well. I would keep this one on a radar. Fantastic opportunity still to be adding to a long-term portfolio if you can handle the China-Taiwan risk, of course. Very high net margins, very good growth, and extremely strong demand for the next 2 years of trading, essentially. Daily bulls are in control, looking for the daily uptrend expansion, and the weekly timeframes are similar to that. Similar to most other semiconductor names, guys, we are still in this very nice weekly uptrend. It was a sideways accumulation above the support range, which is 193 down to about 183, looking very good for a possible next leg higher, as semiconductors are your lead bulls in the market right now. That's everything that I had for you guys today in terms of your price action rundown for the SPY, the indexes, and all your big tech names. Hopefully you enjoyed that. We'll do a lot more in terms of specific companies in tomorrow's video, potentially with some of the trade deals overall, and just focus on these sector leaders right now. Tech and semiconductors are your sector leaders. So if you're looking for possible breakout patterns, right, on other companies that I haven't mentioned, just take a look, guys. Which ones are now currently breaking out of their weekly patterns, looking to attack the top end of resistance ranges, right? Micron is one. ASML is another one that's kind of lagging behind overall right now in terms of the semiconductor trade. Several of the big tech names that I mentioned are also lagging in terms of versus the QQQs, right? The Qs are almost back to their all-time highs, but several names such as Amazon, such as Google, even to some certain extent Apple, to a certain extent Meta as well, NVIDIA to a certain extent, they're all slightly lagging behind in terms of performance. So keep all of that in mind, guys. Try to go for the lagging plays rather than chasing the ones that are just blasting through all-time highs continuously, such as CoreWeave, right? Such as other stocks such as Robinhood, even though Robinhood is a fantastic company, guys. Chasing the all-time highs like this and just going for longs at any price is probably not the best risk to reward proposition. So keep all of that in mind. That's everything I had for you guys today. Tomorrow, as I said, we'll look at a lot more stocks, but we're going to keep the video a bit shorter for today. So hopefully you guys enjoyed today's video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Would love to have you back. We do these every day after the market close. And lastly, if you have any questions, always feel free to leave them down below in the comment section. I always love seeing your guys' questions, helping you out on your stocks, your options, your long-term portfolios, macro discussions, and everything in between. And lastly, if you guys wanted to participate in our own trading group where we build very strong long-term portfolios for our futures, but also trade a lot of the strategies that you see me trade on the channel, such as the wheel strategy, leap call contracts, call debit spreads, directional swing trades overall. If you're interested in participating in a group like that, you may consider joining 150 other members in our own group. And the link to that is down below in the video description. You get access to all my swing trades and all my, credit trades as well, such as the wheel strategies and other directional trades of the sort. You can see a few of my trades made here in the last few weeks. Been very good in terms of the market performance, not being too greedy, but still making a lot of profit every single week. So you get access to all those trades in real time when I do them. You also get access to our private morning live streams every Monday through Friday before and during the open, where I trade for 2 hours live and also answer all your questions on your stocks, your options, and your long-term portfolios. If you can't be there, they're always recorded, so feel free to watch them back. You can also ask me all your questions in our chat rooms throughout the day. I'm very fast to answer, and I give very long and detailed answers for your stocks, your options, your long-term portfolios, or anything you want to know about trading, technical analysis, fundamentals, everything like that. You get access to our private videos as well, where I describe many strategies that you guys see me trade on the channel, but maybe that I haven't published videos on how I actually build those strategies. Good videos on technical analysis, fundamental analysis, the trading strategies, how to grow a small, medium, or large portfolio, which percentage of the portfolio should be in which strategies to maximize risk to reward profiles and longevity for the portfolios. A whole bunch of videos that are very good and our members appreciate a lot. And lastly, you get access to all my watch lists, my options watch list, all the watch lists, and you get access to all my charts and all my fundamentals as well. It's very easy, 2 clicks of a button. You can just copy paste all my chart layouts. It comes with all my stocks, and whenever I do fundamental analysis or technical analysis, like these support resistance boxes overall, anything that's on the chart, such as the fundamentals on over, at this point, 200 plus companies, it all comes as an added bonus for the Discord members. So if any of that interests you, the link to the Discord is down below in the video description. Hopefully I see you in there soon, and if not, I guess I'll see you guys back on the channel, guys. Pleasure as always. That's it for me. Have a very good day in the markets tomorrow on the Wednesday session, and I'll see you guys tomorrow after the close. Take care and peace.